Hey guys, it is Julie here with Tip Ranks. In today's video, we're taking a look at 3 stocks that RBC Analysts see upside of over 40% in. We're going to take a look at these 3 companies and what it is that they do and what the analyst consensus is on their price targets. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to catch my daily pre-market update videos where we're getting you set up with everything you need to know before the market opens. Now, the first company that we're taking a closer look at today is Splunk. Under the ticker SPLK, they currently trade at about $134 per share. Splunk is the data-to-everything platform. They drive outcomes across security, IT, and DevOps with the data platform built for the cloud. With Splunk, you can build a more resilient organization, accelerate cloud-driven transformation, exceed customer expectations, and thrive in the data age. They are trusted by 91 of the Fortune 100 companies and are involved with companies such as Intel, Comcast, and Coca-Cola. The company showed $745 million in revenue for the Q4 of fiscal 2021, up 33% from Q3, but down 6% year over year. They saw their cloud ARR was $810 million, which was up 83% year over year. However, the company showed strong gains in annual recurring revenue, a key metric in predicting future income. ARR for the fiscal fourth quarter was about $2.36 billion, up 41% year over year and topping previously published management guidance. The outlook for Q1 of fiscal 2022 is for ARR of $2.44 billion, which would represent 37% growth. Covering the Splunk stock for RBC is 5-star analyst Matthew Hedberg. He says that we believe one of the keys for the stock is accelerated new customer adds, as green shoots appear to be emerging. Guidance for Q1 2022 reflects a continued conservative posture, which will likely remain until more clear signs are seen around market stabilization and the software as a service mix, so we think there could be upside to estimates. We are bullish on Splunk's ability to grow and take share in a market called operational intelligence, which is more than just analyzing big data. It's about gaining actionable insight to make better business decisions across an entire organization by harnessing the full power of data. There are 17 current analyst ratings on the Splunk stock, and it comes in as a moderate buy with 10 buy ratings and 7 holds. The average price target is just shy of $200 per share for a 48% potential upside. Our lowest rating is a hold from D.A. Davidson with a price target of $156, which would still allow for about a 16% potential upside, and the highest rating comes from Jack Andrews at Needham with a $265 price tag, which would be a 97% potential upside. The second company is GoodRx. Trading under the ticker GDRX, they're currently trading at $36.78 per share. GoodRx believes everybody deserves affordable and convenient healthcare. They build better ways for people to find the best care at the best price. Their technology gives all Americans the knowledge, choice, and care they need to stay healthy. I know I've definitely seen a lot of their commercials for savings on prescriptions, but they do offer a lot more than just that. They also offer online doctor visits with same-day appointments with an online healthcare provider starting at just $20. They have lab testing options where consumers can find at-home lab tests or tests at a service center in their area starting at less than $50, and GoodRx Gold, which gives them even better access to healthcare savings, free prescriptions deliveries, and an exclusive discount card for medications, as well as providing information for consumers on healthy living, disease management, and healthcare costs, as well as resources for professionals. GoodRx has saved consumers about $20 billion to date, and since 2011, they estimate that GoodRx has helped more than 18 million people pay for a prescription they otherwise wouldn't have been able to afford. 15 million people visit GoodRx every month to learn about and save on their healthcare. The company reported Q4 results earlier this month and showed gains in several key metrics. Revenues from prescription transactions were up 26% year over year to $131.3 million, and customer membership increased 32% year over year to 5.6 million. Total revenues for the fourth quarter, the company's first full quarter as a publicly traded entity, were $153.5 million, which was a gain of 36% from their fourth quarter of 2019. At the same time, the company's net loss per share deepened from 12 cents in Q3 to 76 cents in Q4. Covering the stock for RBC is Sean Dodge, who likes this stock despite its Q4 earnings loss. Their revenue of $153.5 million compares favorably to its previous guidance and street estimates of $148 million. The outperformance was driven primarily by an increase in monthly active consumers, as well as demand for telehealth and other ancillary services. Beyond its core prescription segment, we believe GoodRx is well positioned to capture option values by penetrating the $30 billion medical marketing and $250 billion telehealth markets. GoodRx has 9 current analyst ratings on their stock, and it comes in as a moderate buy based on 5 buy ratings and 4 holds. The average price target is about $50 per share for a 37% potential upside. The most recent comes just 2 days ago with a $61 price target for about a 65% potential upside. Our lowest is a hold rating from Morgan Stanley with a downside potential of about 2%, and the highest comes from Cohen & Co. with a $70 price target for a 90% potential upside. And third on our list today is Gamida Cell. Under the ticker GMDA, they're currently priced at $8.96 per share. Gamida Cell is pioneering new standards of care for patients with blood cancers and serious blood diseases. Gamida's pipeline includes 2 agents under investigation for the treatment of 4 conditions. At early stages of the clinical phase process, GDA 201 is being studied as treatment for non-Hodgkin's lymphoma as well as multiple myeloma, 2 dangerous blood cancers. Amidubicel, the second agent, is also in early stages of trials for its efficacy against severe aplastic anemia, but is much farther along in testing as a treatment for high-risk hematologic malignancies. Their pipeline is built on proprietary NAM platform technology, which enhances the number of allogeneic donor cells and preserves cellular functionality and phenotype, and has the potential to expand to any cell type. Earlier this month, Gamida released results of Phase 3 clinical study of their Amidubicel against those malignancies at the European Society for Blood and Marrow. Gamida stated that the study's secondary endpoints demonstrated a statistically significant improvement among patients treated with Amidubicel. In addition, patients given the drug were significantly less likely to require hospitalization in the first 100 days after treatment. Gamida states that it will use this clinical data to support its submission of a biologics license application to the US FDA in the 4th quarter of 2021. Covering this stock for RBC is Gregory Renza. He wrote that we believe that, if successful, Amidubicel has a role in the HCST treatment paradigm across several patient segments, including those with no existing donor options. Should the data continue to demonstrate a favorable profile and the program ultimately convert, we see potential for more than $1.4 billion in peak sales, with GMDA capturing about $800 million in revenues from assumed standalone U.S. efforts. The Gamida Cell stock has 6 current analyst ratings, and it comes in as a strong buy. The average price target is $19 per share for a 112% potential upside. The most recent did come from Gregory at RBC Capital from 9 days ago with a $14 price target. Our highest on the list, however, comes from H.C. Wainwright 1 month ago with a $27 price target, which would be over a 200% potential upside. So there we have 3 stocks, all with some pretty attractive upside potential according to analysts. Now, I love hearing from you guys, so make sure to leave your comments down below on what you think of these 3 stocks or what others are catching your eye lately. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Always make sure to do your own research and due diligence before making any investment decision. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to catch my daily Monday through Friday pre-market update video where we get you set up with everything you need to know before the opening bell. Thank you guys so much for watching, and we will see you back here next time.